If you don't own stocks, you will never be rich. And if you've had a recent increase or surge in wealth and you still don't have stocks, you will not preserve your richness or your wealth, statistically speaking. Hey, I'm Vosk. Why would you listen to me, some dude off the internet? So I'm going to give it to you real quick. I focus every day on learning more to earn more. It's become the mission statement of the VoskCoin YouTube channel. I am actively working on content creation with VoskCoin, as well as my own mining farm business, and then just doing a lot of investing and trading in conjunction with all of that. But the key takeaway is I've been able to increase my net worth year over year. It doesn't really matter, in my opinion, how much I have. It's the fact that my net worth is going up in amounts that I'm happy with, I'm proud of, and I'm making steady progress, even within volatile sectors like cryptocurrencies and tech stocks, where it is very often a feast or famine type environment. But I saw some data, and I just kind of want to talk about it and expand about it and share it with you, that absolutely piqued my interest. So apparently, 158 Americans own stocks. That means that, surprisingly, more than half of Americans own stocks, or 61% of United States adults. And to be frank, that number is even only that high due to 401ks and other basically job automated investment mechanisms. See this B right here? Come on, B. Bye-bye. How many stocks do you own? You're not part of this video. See you later. Now back to your regularly scheduled programming. The top 1% holds 49% of stocks worth $20 trillion. The bottom 50% of US adults hold only 1% of stocks. They are the 1% in the worst way you want to be, worth only $41 billion. According to the Federal Reserve, in 2022, which was a booming year for stocks and cryptocurrency, 2022 was really the fallout year of the post-COVID pump, where we saw a lot of lows in March 2020, and then prices continued to rise throughout most of 2021, some of 2022. But the bottom line is, a lot of people in the market thinking they're going to be the next trader, or their amigo buys a stock, so they grab some. There's just a lot of additional pressure and promotion and just publicity to be involved with the stock market and cryptocurrencies, but really we're going to focus on stocks here today. But here's what's crazy. Based on 2022 data, 58% of US families held stock. 72 million families, according to the Federal Reserve's data. 21% of US families, about 26 million families, directly held stock. I think that's big. I think that's a key piece of data. So let's extrapolate. If you own stock, you are now in the top 20%. If you are directly owning stock, you are rare. You are doing something different than 80%. Being wealthy means that you're going to have above average wealth. Honestly, a big part of winning is just showing up. And remember, this isn't investment advice. This is mindset talk, entertainment purposes only. I engross myself in all this stuff all day, every day, so I can try to stay sharp. When I was young, I thought it was all about training, right? And I really understood and focused on physical training. I understood, like, I could work out. I could grow my muscles. That makes sense. But you know what I really slept on until a little bit later in life? Strengthening your mind, building your mindset, becoming more knowledgeable, right? I spend more time training my mind than I do my body. And that is a key to success. Your body can only take you so far. Don't neglect it. But it is your mind where your entire upside probably is, unless you're going to the NFL or something. And even then, those guys are sharp mentally on the game, if nothing else.
How does that defense compare to others that you've seen this year?
Yeah.
How does your back feel, Marshawn?
Yeah.
Want to invest in Bitcoin mining but don't want to mine yourself? Check out today's video sponsor, Go Mining. Go Mining offers users a way to earn Bitcoin by buying NFTs that represent a share of hash rate dedicated to Bitcoin mining. The prices of these NFTs start as low as $30 and can be upgraded to get additional rewards. Go Mining's token, Go Mining, is the platform's native currency, and users can get an additional 10% discount on electricity and maintenance costs when using their token. And for a limited time, they're offering our community a special discount on your first purchase by using code VOSK. To learn more about Go Mining, check out the link in the video description below. Please do your own research before investing.
And look, I'm not saying if you just directly hold stock, then you're going to be good to go. You could also directly hold the wrong stocks. You can also just click the easy button and directly hold index funds. Like, I've got some of the Vanguard funds in my IRA. In a way, being in stocks used to be kind of like a rich man's game. Back in the 90s, only about 30% of United States families held stocks. It wasn't as easy as click a button, download an app on your phone, which basically everyone has now, right? And then you put in your information, you link your bank account digitally, and then they take your digital dollars from your bank and they put it in your digital stock account, and now you can start submitting market buy orders on whatever stock you want, whether you want to buy into Nvidia, or maybe you think Elon Musk is funny and you want to get some Tesla stock, or you're a lover of donuts and you go and you search for Krispy Kreme, which of course has the ticker DNUT.
Got him!
The point is, it has never been easier to buy stocks that you believe in, whether it's their company's performance or you're just a user of their product. One of the simplest pieces of advice that I heard regarding stocks is if you are using something and having a really good experience, whatever that is, maybe you go to Krispy Kreme and it's great and it seems really efficient. Or maybe you're a Peloton user and you've had a great experience on that front. Granted, the Peloton stock has been performing pretty poorly over the last couple of years in the post-COVID fallout. But the point is, right, you know, you're using this and it's going really well, and everyone else you know who has it is having a good experience. That is like ground level information of maybe this is a good company going places. It's not always that simple, but it's just kind of like a little bit of food for thought on where to get started. But my point is, 90s, about 30% of families held stocks. 2022, nearly 60%. Stock ownership, that means, has doubled. And more than half of people in this country of the US of A are in the stock market, basically knowingly or unknowingly, with their direct or indirect stock holds. That means you are losing that much more if you're not in the game. It's also going to be a little bit harder necessarily to do very well. If we look at why would I own a stock, right? It just comes down to a couple simple things. It's a preservation of wealth. It's a hedge against inflation. You can earn dividends, so it can basically be a form of passive income. And it can just be looked at as a straight investment. I want to put in, $100, $1,000 into the stock, and I want to try to sell it for $2,000 in the future. The bottom line is, for me, it's a way to make money or preserve money. The buying power of the US dollar and really all other fiat currencies continue to rapidly plummet. And you contrast that, and of course I'll just pick a winner to have a good example here, with something like Nvidia, right? Not only is Nvidia doing well, it's thriving, right? It's moisturized in its own lane, doing just fine. And then even stocks that seem to be sideways or a slight increase are oftentimes beating a basic savings account, right? If your stock is going up 5% year over year, while that's not mind-blowing money, you're doing all right. And then if you're earning dividends on top of that, not bad. It's better than your dollars sitting in an account and earning 0.1%. And maybe you're like, but dude, I'm in a high yield savings. We are in a weird, unprecedented era of very high savings. My Capital One account, I've got over 4% interest rate. In my Robinhood Gold account, I'm earning 5% on my cash that's just sitting there parked. Both of those accounts are FDIC insured. I have a couple CDs and bonds that are earning over 5%. We're talking average major index fund returns with zero risk, essentially, other than the fact you're in this currency they keep inflating. On the topic of apps, I really like Robinhood. I know people have their gripes with it, especially in the crypto sector, but they also offer cryptocurrencies to begin with, and they were very, very early to do that, which is very cool, right? I also use Charles Schwab as well as Fidelity. And the cool thing about Robinhood is they're coming out with their 3% on everything, cashback credit card, no fee. You just have to be in the Robinhood Gold, which is $5 a month, and I'm already in that to have the higher savings rate on my parked cash on Robinhood. So I'm pretty excited for that. Of course, go out there and do and use whatever you want to do. I just wanted to touch on that if you're completely new to this stuff. And now let's break down stock ownership by wealth. The top 1% have about 50% of their wealth just in stocks, let alone real estate, cryptocurrency, and all these other things that you could do with your money. The top 10% are almost at 50%. Back in the tech bubble around 2007, 2008, Americans within the wealth percentile of 50 to 90% had their stock ownership representing about 20% of their net worth. And here's what's crazy. The bottom 50% of Americans in terms of net worth hold only 1% of stocks, which in 2023 is less than $5 trillion. If you take the 50 to 90%, they hold about $15 trillion, about 3 times as much, and it's a smaller percentage population. This category is a little less interesting to me, but let's break it down real quick. Stock ownership by generation. Baby boomers have the largest share of stocks. They hold 54% of stocks. Gen Xers hold 21% of stocks, and millennials own 7.3%. How much does Gen Z own? The Federal Reserve doesn't report it. Motley Fool reports that in their research, 57% of investors, or just people they talk to, Gen Zs and millennials, invest in the stock market. But you would only read their stuff if you invested in the stock market. So it's just not good data. I guess you could say if you're interested in stocks and you're a Gen Z or millennial, you have a 57% chance to go out there and invest in one. If you check out this chart, all the wealth was with the silent generation, and earlier the baby boomers crossed them, and then Gen X has crossed the silent generation and beyond, and millennials are moving upwards as you would expect as well. I think a key reason why you don't see a huge surge from Gen X, but especially from millennials, and I think you'll see this trend even more in Gen Z, is that millennials and Gen Zs, I think, are turning more to cryptocurrencies as a percentage compared to previous generations. It's newer. I mean, crypto is basically like the new age stock market, and it's becoming more legitimate every day. There's a Bitcoin ETF, Ethereum ETF, among other publicly traded cryptocurrency stocks. You could be in the stock market and own straight crypto stocks in numerous categories now. So even then, interesting. But my point is that they're out there perhaps throwing their money at crypto instead of stocks. I personally know Gen Zs that are doing that exact thing. No stocks, straight crypto. But my point of view is skewed. Granted, this is a family friend, so not really, but I'm in crypto. So I would know more people in crypto. I'm not trying to open a can of worms with this one, so we'll just take this screenshot from the article, but this is just simply data that they've reported, and that data is white Americans owned 88.8% of stocks, totaling $35 trillion. In 1989, it was 96% white American ownership. They report that 13.8% of the US population are black Americans, and they only own 0.7% of stocks. Hispanics reportedly make up 18.9% of the US population and only own 0.7% of stocks. This data also shows that the average value of stocks held by American families in 2022 was $52,000, which is well above what it was in the early and mid 1990s, but below the peak recorded in 2001. The dollar is also, at best, half as valuable as it was in the 90s. I would say that the dollar is quite literally like 33% as useful as it was back then. Crazy. The devaluation of the US dollar. Most people want to invest in the next Amazon, right? If you invested in Amazon back in 1997 with $1,000, your $1,000 investment would have turned into over $1 million, a 150,000% return. It's absolutely crazy. Easier said than done, Very risky then, huge returns later on. But the bottom line is, no risk, no reward. You can sit in your dollars, and if you had $1,000 in your savings account in 97, I don't know, I didn't do the math for this one, you'd probably have like $2,000 now. Or you could have thrown it at the stock market, and in even simple stocks of just something like Walmart or Toyota, you could have substantial returns. And with Walmart, you earn dividends along the way. Of course, these companies could have gone belly up. It could have not worked out. But I love the quote, nothing ventured, nothing gained. If you don't get in the game, you will never win. And that is why the bottom 50% have 1% in stocks. And the less money you have, the more difficult it is. The more risky it is. I get that. Within the last 10 years, I was in the bottom 50%. I was young. I had a very low net worth. I basically owned my 10 grand Mustang GT from 2003. That's all I had. What would I do if I could go back? I would take every dollar I could possibly find and I would throw it at stocks and cryptocurrency. And I just leave it there. And if I could get a couple grand into the market a year, and that couple grand could turn into several grand or tens of grands, and if it went belly up, fuck it. At least I'm trying. I'll be way further ahead, and it'd be way easier. Because that's the other thing, right? I'm self-employed. I work on my businesses all day, every day, which is intense. Stocks are easy, right? You do your research, you put it in there, you let it ride. For me, generally speaking, especially in stocks, I'm looking at long-term positions. I'm not trying to be the next stock day trader. For any day trading things I do, I look at cryptocurrency, 24/7, 365, fast market. It is just blistering fast. Good and bad things come with that. And the markets don't close on your holiday. You can get wrecked on a holiday. No sleeping. But the point is, how else do we need to spell this out? The wealthy own stocks. They own a lot of stocks. If you don't own stocks, you would be a statistical rarity to ever get rich. Truly. I mean, statistically, it just ain't gonna happen. And it doesn't mean you get into the stock market and you're good. That's it. You did it. It takes discipline. It takes research. And if nothing else, I wish I could go back in time and just bust my ass constantly to earn anything and everything that I possibly could, and then just funnel it all right into the market. Because there was a period where I was not in a favorable living situation at all. So I worked hard, or at least I thought it was hard. I'd say it was moderately hard. I guess I definitely could have been digging deeper, but I fooled myself into thinking I was working harder than I really was. So that's part of mental development. But the point is that I was so focused on, I gotta just get out of here, that I needed to save as many dollars as I could, keep them right there in my account, watch the number go up, and then throw that at a house or a down payment and go from there. In retrospect, I would have thrown everything into the market, and then I would have tried to get into a house at a low percentage down and keep all my stuff in the market, let it ride, and try to focus on getting better returns than the amount of money I'm losing in interest on my mortgage. Paying off your mortgage, right, depending on your interest rate and other factors, and especially age and things like that, it's not really a winning game. I earn more in my USD savings account than I lose in interest against my mortgage. So I have a good mortgage rate. Doesn't really even matter what it is. It's less than my 5% returns on Robinhood Gold or numerous other places we already discussed. So let's say I'm accruing $100 a day in interest, right? But I'm making $110 a day in interest in my savings account. You can also deduct a portion of your mortgage interest. Yes, I am taxed on the interest in my savings account. But the bottom line is, somewhere there's an equation where it makes more sense to not pay off the mortgage, at least in favorable market conditions, especially if you're young. You gotta get capital, you gotta get liquid, you gotta get your stuff out there working for you. You can only earn so much with your time. Financial freedom is achieved through developing capital deploying it, utilizing it, and compounding it. And on that note, let's get you to compound the subscribers on this channel. Smash the subscribe button. I hope you like this video. Let me know down in the comments what you think. My biggest takeaway is I feel like I need more stocks. It's not just about getting a couple stocks, it's more stocks, it's better stocks. And I need less dirty dollars because they ain't doing shit for me. And our government's just been on that money printing bird machine, and I'm over it. But you know what I'm not over? 10 Seconds of Tails, which we run on every video because she is our CMO, our Chief Money Officer here at the VoskCoin YouTube channel. Of course, she manages the finances. Look how cute she is. You think she's not smart too? I'll see you on the next one. Thanks for watching.